We talked about this earlier. You know, luxury home buyers are starting to opt for ARMs now, and we were talking about the difference between the ARM and the fixed mortgage, and the benefit of that. The example is, you know, we had a closing this week with a luxury home buyer that bought, used an ARM specifically because the spread between the ARM and the fixed rate was so substantial. Talk on that for maybe a second.
So historically, you've always been able to get a benefit in your interest rate by choosing to take an adjustable rate mortgage over a fixed rate mortgage. I would say now than ever before, the gap between those two loan rates have never been smaller. In other words, if you're getting a conventional loan, that's defined as a loan that's $417,000 or less, I would say it doesn't make sense for the most part, unless you have a very short-term plan for the home that you're getting into. Now, what Andrew's referring to is the jumbo loans. Now, the jumbo loans, there's not really a standard product out there in the market. In other words, Fannie Mae and Freddie Mac do not issue these type of loans.
Portfolio, a lot of times.
They're portfolio. So they're just up to whatever financial institution wants to invest in these things. And with those, you do see a greater benefit on the adjustable rate mortgages versus a fixed rate because it's a large sum of money. It's kind of like, would you want to put your money in a 3% CD if it was a 30-year, locked-in CD? Maybe, maybe not, and the investors are the same way. So you see a lot better spread or better gain whenever you go to an adjustable rate, whenever you're looking at the jumbo products as well.
And again, I think the down payment requirements for jumbo loans have changed too. You've got, there are loan products out there for doctors now with no money down. There are loan products today that don't require as much of a down payment. I was surprised this week above $1 million home sale, and it was a 15% down payment, and I was baffled by that. I thought that I thought that it'd be even higher than that, and pretty surprised by it.
Yeah, and some of these programs, like I said, the programs, they're not like a fixed program that exists out there. Like FHA, I could tell you all day long, this is what it means and this is what you need. When you go into a jumbo, it's just kind of whatever the investing institution wants to do. So sometimes they say, hey, we'll do this, but you're going to have to move your accounts here. They can kind of...
They can be creative.
It can become
especially for business owners. You can have a business owner get a sweet deal, and that's what this was. I think this particular bank offered this business owner a pretty sweet deal because he could essentially bring them more business, and they're using the loan like a loss leader in a sense. They're going to get other business from him.